We're jumping straight into Peraso today. Everyone is watching the price action, but the real story is the massive inflection in mmWave demand and a game-changing drone partnership.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we really unpack all of this, make sure to subscribe and hit the like button. Our entire mission here is to take all this complex market data, all the noise out there, and just simplify it for you. So if you want to stay ahead of the curve without needing a finance degree, hit that subscribe button.
Yeah, absolutely do that.
Okay, let's set the stage here, because the context of what is happening today, March 6, 2026, is absolutely fascinating.
It really is. It paints a picture of two completely different realities happening at the exact same time. I mean, if you look at the broader market today, it is incredibly ugly out there.
Oh, it's a sea of red.
Right. The Nasdaq is taking a heavy beating. We're talking down over 300 points, which is roughly a 1.47% drop. And this is largely being driven by the weak jobs data that hit the wire this morning.
Yeah, that really spooked people.
It has institutional managers feeling highly anxious about the macro environment. The sentiment out there is strictly neutral to bearish right now. You are seeing a classic de-risking event where capital is just fleeing.
Fleeing from almost everything.
Everything. But sitting right in the middle of this massive sea of red, you have this incredibly niche micro-cap semiconductor company, Peraso. And they are experiencing a violent bullish breakout.
It's wild. I was actually looking at the trading screens before we started recording today, and the pre-market and intraday volume on this thing is just staggering.
It's totally disconnected from the broader tech sector.
Exactly. The rest of the tech heavyweights are retreating, they're bleeding out, and investors are absolutely flooding into this specific name. It is the ultimate market contradiction.
It really is.
And so our mission today is to figure out the why. Why are traders and institutional eyes suddenly locked onto this tiny tech player while the Goliaths of the industry are just stumbling around?
Right.
And from what I saw in our notes, it starts with a pretty wild revenue inflection point. I was looking at their first quarter 2025 numbers, and their mmWave revenue alone just exceeded their entire full year 2024 mmWave revenue. Is that actually right?
Yeah.
In one single quarter, they eclipsed an entire year's worth of sales.
The numbers absolutely hold up. And really, the sheer velocity of that kind of growth is what is catching everyone's attention right now.
I mean, it has to.
When a company compresses 12 months of revenue generation into a 3-month window in their core growth segment, it signals that something fundamental has shifted.
Right. It's not a fluke.
No, it tells the market that the adoption curve for their technology isn't just a slow, steady climb anymore. It has suddenly snapped into place. They are hitting that true hockey stick growth phase.
And I saw some specific purchase orders in the filings that back this up, right?
Yeah, they had a few big ones.
There was a $0.9 million production order from a new OEM, specifically for their 60 gigahertz modules. Plus, there was another $0.5 million in legacy memory IC orders slated for the fourth quarter of 2025.
Exactly.
But playing devil's advocate here, in the grand scheme of the multi-trillion-dollar tech sector, $1 million order sounds like a rounding error. So why is the market reacting so aggressively to these specific figures?
Because context is everything here.
Yeah.
We are talking about a company with an $8 million market cap.
Wow, only $8 million.
Right. When your entire valuation is sitting at $8 million, a combined $1.4 million in locked-in purchase orders isn't a rounding error at all. It is a massive fundamental validation.
That's a huge percentage of their market cap in just 2 orders.
It proves this isn't just a flash in the pan or some speculative R&D project. It is tangible, real-world momentum. But to really understand why they can capture this revenue so efficiently and let it actually flow through to their valuation, we have to look at how they are structurally built.
Okay, let's break that down.
Sure. So Peraso runs a fabless model, which in the current economic environment is acting like a massive financial field for them.
Shielding them from what, exactly? The broader hardware sector's drag.
Precisely that. Because they operate a fabless model, they are completely insulated from the crushing capital expenditures that are currently dragging down the broader semiconductor space.
Because building those factories is incredibly expensive.
Oh, it's billions. Nobody wants to be financing the construction or the upkeep of a multi-billion-dollar fabrication plant in a macro environment where borrowing costs are sky high and demand is shaky.
Right.
So by outsourcing the physical manufacturing to third-party foundries, they let those massive partners eat the overhead. Peraso designs the architecture, they own the highly lucrative intellectual property, but someone else does the heavy lifting of actually printing the physical silicon.
And the impact on their balance sheet is just wild. I saw their operating expenses were brought down to just $3.2 million in the first quarter of 2025. I mean, they are running incredibly lean.
That operational stability is their secret weapon as a microcap. Because they aren't bleeding cash on factory upkeep or servicing massive debt loads for manufacturing equipment, they can funnel their capital entirely into what actually drives their enterprise value.
Which is the IP and the research.
Exactly. Research and development, securing those design wins, and high-margin IP licensing. It is a highly efficient machine designed to survive the lean times and maximize free cash flow when these innovations finally hit the market.
Let's talk about those innovations then, because this is the competitive moat that feels like the real story today. Their core asset is their proprietary 60 gigahertz mmWave IP and chipsets.
Right.
I know the 60 gigahertz spectrum is prime real estate because it's unlicensed, meaning companies don't have to get locked into massive government options to use it. But beyond the cost savings, what makes this specific frequency so valuable?
To appreciate the 60 gigahertz spectrum, you really have to look at the physics of it. It operates at a very high frequency, which means it can carry an absolutely massive amount of data at multi-gigabit speeds with virtually zero latency.
Okay.
It thrives in environments where traditional Wi-Fi or standard cellular networks just choke out from congestion. But here is the truly fascinating part. Signals at 60 gigahertz suffer from what is called oxygen absorption.
Oxygen absorption.
Right. They physically interact with oxygen molecules in the air, which means the signal degrades very quickly over long distances, and it cannot easily penetrate walls.
Wait, that sounds like a massive flaw. Why would you want a wireless signal that dies out quickly and can't even go through a wall?
In consumer Wi-Fi, it would absolutely be a bug. You'd hate it.
Yeah.
But in tactical, military, and dense enterprise environments, it is the ultimate feature.
Oh, because of security.
Exactly. Because the signal is confined and decays quickly, it is virtually impossible for someone miles away to intercept or jam it. You are creating a massive, high-speed data pipe that is naturally shielded by the laws of physics. Add their advanced beam-forming technology on top of that, and it becomes a fortress.
Let's break down that beamforming aspect, because the analogy I always use is the light bulb versus the laser pointer.
That's a great way to put it.
Yeah, like traditional Wi-Fi is the bare light bulb in the middle of a room. It just blasts the signal out in a 360-degree sphere, lighting up the whole room, hoping your laptop or your phone catches a piece of it. It's inefficient, and it splashes everywhere.
That's a perfect way to visualize it. If traditional Wi-Fi is that bare light bulb, Peraso's beam-forming technology is a highly calibrated laser pointer. It dynamically focuses the wireless signal directly at the specific device that needs it, tracking it in real time.
So it's not just broadcasting to the whole block.
No, the signal isn't splashing everywhere for bad actors to pick up. It creates a highly secure point-to-point link. When you combine that laser pointer beamforming with the natural decay of the 60 gigahertz spectrum we just talked about, you get a communication link that is exceptionally fast, incredibly stable, and fundamentally unhackable from a distance.
That is an absolute necessity for modern mission-critical applications.
100%. Which explains why getting embedded into these systems is so lucrative for them. When an OEM builds around this technology, they aren't just buying a plug-and-play part off a shelf. They are making a massive structural commitment.
The switching costs have to be astronomical.
They are. Think about an OEM integrating this into an advanced factory robotics system or a fixed wireless access network like the major infrastructure project Peraso is working on with Waylink right now.
Right, that Waylink deal is huge.
It takes years of engineering resources, software integration, and rigorous testing to build a product around a specific mmWave chipset. Once that tech is in the final product, the OEM is effectively locked into the ecosystem for the entire life cycle of that hardware.
Because it can't just rip it out and start over.
Exactly. They cannot just swap out the core communication architecture for a cheaper competitor without completely redesigning their system from the ground up.
And that leads us directly to the ultimate catalyst. The massive news that dropped today, driving all this volume. The Intact partnership.
This is the game changer.
Intact officially selected Peraso's 60 gigahertz technology for their brand new drone IFF systems. And for those listening, IFF stands for Identify Friend or Foe. In a tactical battlefield scenario with drone swarms, that is the system that tells a military operator whether an approaching drone is a friendly asset or a hostile threat.
The stakes there literally could not be higher. If an IFF system fails, or if it experiences even a split second of lag, or if it gets jammed by an adversary, the result is friendly fire or a compromised defense perimeter.
It's life or death.
Exactly. So when a major defense player like Intact selects your specific technology for a tactical drone system, they are putting an undeniable stamp of approval on your security and reliability.
It's the ultimate validation.
It really is. It proves that this proprietary 60 gigahertz beamforming tech isn't just a cool theory in a lab. It is robust enough for the most unforgiving, secure environments on the planet. That David versus Goliath dynamic, where this tiny $8 million company holds the keys to a technology that multi-billion-dollar defense contractors desperately need, is exactly why the market is reacting with such a powerful breakout today.
So if this tech is essentially a holy grail for secure communications, and they have this massive defense validation locked in, why isn't the stock completely immune to the market bleed we're seeing today? Why does an $8 million market cap still feel like a high-wire act?
Looking at the flip side.
We have to talk about the risks.
We do. We have to ground this enthusiasm in the reality of the broader market mechanics. Because as compelling as the fundamental technology is, and as incredible as that Q1 growth looks, no asset trades in a vacuum.
Right.
The most glaring headwind right now is the macroeconomic environment.
We mentioned the weak jobs data earlier and the NASDAQ shedding 300 points. How does that macro fear specifically trickle down to a microcap like Peraso?
Well, when macroeconomic fear hits the market, whether it's weak jobs data, inflation concerns, or interest rate anxiety, institutional portfolio managers start de-risking immediately.
They pull their cash back.
Right. They take their capital out of speculative, high-growth, or small-cap assets, and they park it in massive, safe haven mega caps. They seek liquidity. At an $8 million valuation, Peraso has an incredibly small institutional float.
So they get tossed around easily.
Very easily. They are highly susceptible to these broader sector rotations. When the tide goes out on the tech sector, microcaps are usually the first ones pulled out to sea. The niche demand for their mmWave technology provides a great narrative, but it doesn't grant them immunity from the sheer gravity of a market-wide sell-off.
It also seems like that fabless model we were praising earlier has a dark side when it comes to execution. It's a double-edged sword.
It absolutely is.
They don't own the factories, which keeps their balance sheet clean, but it also means they don't really control their own destiny.
That is the ultimate vulnerability in their supply chain. Because they rely completely on third-party foundries to physically manufacture their chipsets, they are entirely at the mercy of those foundries' production schedules.
And those foundries are serving Apple and NVIDIA, too.
Exactly. The global silicon supply chain is notoriously complex. If a foundry decides to prioritize a massive order from a trillion-dollar tech giant, or if there is a localized delay in manufacturing, Peraso's timeline gets bottlenecked.
Just have to wait in line.
Right. They can have all the signed purchase orders in the world, like that $0.9 million OEM deal we talked about.
Yeah.
But if the foundry doesn't print the physical chips and ship them out, Peraso cannot recognize that revenue on their income statement.
And with a market cap this small, any delay is going to be magnified tenfold. It feels like perfection is priced into this near-term narrative right now. If the foundries deliver, the upside is obvious.
Right.
But if there is even a slight hiccup in fulfilling these tech orders or a delay in the intact drone rollout, the downside price action could be violent. I mean, they don't have a billion-dollar cash cushion to absorb multiple delayed quarters.
They don't. That razor-thin margin for error is exactly why traders are watching this so closely. The execution of these Q1 2025 beats is absolutely critical.
It has to be flawless.
The market is pricing in the best-case scenario today based on the intact validation, but the management team now has to prove they can navigate the supply chain realities and actually get the silicon into the hands of their defense and enterprise partners on time.
Okay, so considering the massive potential of this 60 gigahertz moat on one hand and the very real execution risks of outsourced manufacturing on the other, how should you be navigating this setup? What are the specific triggers or events you need to be watching over the next 30 to 90 days?
The primary catalyst to circle on your calendar right now is their mid-2026 earnings report. This is where the narrative actually meets the balance sheet.
I imagine the main thing to look for is whether the massive Q1 momentum, combined with this intact win, forces analysts to update their models. From what I can see, there isn't a ton of forward guidance officially penciled in for the back half of the year.
That's the key right there. If the earnings call reveals that the pipeline of orders is expanding faster than anticipated, or if leadership provides aggressive forward guidance based on these new partnerships, you could see a rapid structural shift in how Wall Street values their future cash flows.
An uplift in consensus would be a massive driver.
Huge.
What about outside of the financial filings? Where else does a company like this build momentum?
You need to keep a very close eye on the defense and specialized tech conference circuit.
Trade shows.
Exactly. In this specific industry, massive deals are born at trade shows. Look for showcases specifically featuring their drone IFF technology or their fixed wireless access design wins.
Because seeing is believing for these contractors.
Precisely. When an engineering team can stand in a room full of defense contractors and physically demonstrate a secure, zero-latency communication link that resists jamming, it accelerates adoption dramatically.
That makes a lot of sense.
Additionally, pay attention to any upcoming investor webcasts. The tone of the leadership team when discussing their founder relationships will give you vital clues about their confidence in navigating those supply chain risks we just talked about.
I'm also fascinated by the speculative catalysts here, specifically the domino effect of the intact partnership. If one major defense contractor integrates this 60 gigahertz tech for highly secure tactical communications and proves it works out in the field, it stands to reason that other contractors are going to want the exact same capability.
The defense industry is highly reactive. Nobody wants to be left with inferior tactical communications while their peers upgrade. If you start seeing press releases about secondary or tertiary defense integrations following this intact deal, it validates the thesis that Peraso's proprietary technology is moving from just a niche solution to an actual industry standard for secure edge environments.
And that's how you scale up.
That kind of cascading adoption is what transforms a microcap into a midcap.
Finally, we have to keep an eye on the macro environment for strategic entry points. We already noted the NASDAQ dropping 300 points today.
Yeah, you can't ignore the macro.
If the broader market continues to experience weakness, or if we see capital start to rotate out of the bloated megacaps and hunt for high growth potential in the 5G and mmWave sectors, it could create some very interesting dip buying opportunities.
Absolutely. The macro tides are going to create the volatility. You just have to decide if the underlying fundamentals of this specific company make it worth the ride.
Which requires a constant reassessment of their execution. Are they hitting their delivery targets? Is the foundry holding up its end of the bargain?
Right. The narrative is incredibly strong today, but the follow-through over the next few months will ultimately dictate the long-term trend.
So bringing this all full circle, we are looking at the ultimate market tension today. On one side of the scale, you have an $8 million microcap playing the role of David, sitting on a highly defensible proprietary 60 gigahertz moat.
Yeah.
They've just reported exploding Q1 revenue that eclipsed an entire year's worth of past performance, and they've secured a massive life-or-death validation of their tech through this tactical drone partnership.
That's a great setup.
But on the other side of the scale, they are battling against the inherent execution risks of outsourced manufacturing. They are completely at the mercy of foundry schedules, all while navigating a shaky macroeconomic environment that is actively punishing tech stocks today. It is a brilliant, high-wire act of world-class innovation versus gritty supply chain reality.
It truly is. And it leaves us with a much larger question to consider regarding the future of global communications. As the world accelerates toward edge computing, and as we see the widespread deployment of advanced drone swarms that require instantaneous, unhackable communications just to function safely, how critical will this niche, unlicensed 60 gigahertz spectrum become on the global stage?
It seems like it's going to be mandatory.
We're moving into an era where latency and signal interception aren't just inconveniences anymore. In tactical and automated environments, they're critical failures.
Right.
And as this proprietary technology becomes undeniably essential, a massive strategic cogent emerges for the industry. Will the giant defense and tech conglomerates eventually try to spend the billions of dollars and years of R&D required to replicate this intellectual property themselves? Or, as we so often see in the tech world, will they simply decide it's cheaper, faster, and far more efficient to just acquire the innovators who built it first?
That's a lowdown on Peraso. Keep learning, keep questioning, and we'll catch you on the next one.